Morning, traders. Welcome to the Traders Lab. I'm your host, Tom Mee. Thanks for visiting. Quite a day today. Very volatile. This stream is about integrating Bookmap order flow tools with auction market theory using a volume profile as a chassis in the intraday developing time frame. It's based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community. Trader Lab's a community of like-minded traders who come together to leverage their collective experience in order to do better. It is based on the business of trading, how the market works, why it does what it does, and how at times you can get in alignment with it, and also the idea of building out a business, understanding that you need vetted, structured trades that have a statistical edge anytime you interact with the other market participants. And the idea is just like in gaming, casinos operate in a completely random environment. We also operate in a random environment, in spite of what many retail traders think that it's somehow predictable or you can get confirmation. I believe the only thing you can confirm is that it's random. After that, it is statistical probabilities operating in a 100% random environment, which definitely messes with our psychology because our nature is to avoid pain, to avoid risk, and to look for certainty and confirmation. And the vocabulary, of course, says a lot about your beliefs. If you're putting indicators together or whatever process it is to look for confirmation, confirmation does not exist, but probabilities do. So do you know anytime you interact with the other market participants, whether you actually have a statistical edge or it just looks good? That's a question. And if you're just sort of making it up as you go, that might not be a recipe for longevity in this business. So if you are interested in the longevity or creating a business model or plan, basing it on a successful business model, which is gaming, that's what we do at the Trader Lab. It's about using what we already know that works and then adjusting it for the environment that we are in, which is the same as the casinos, random. By the way, I think I'm going to do something a little different today since we have so much volatility. Those of you who follow Trader Lab here daily, I appreciate you visiting the stream and always attending. You know this stream is based on 60 PDFs of these structured trades, which are available to everyone in the Bookmap Discord Trader Lab community, as well as a library of webinars. And you're all welcome to access that. There's no cost. There is a link in the bottom of YouTube. Now, I think what I'm going to do is I'm just going to jump to the present, and I'm going to do something different today. We have structured trades. A number of them went off. The last one was called the IB continuation trade. Let me see when I got into this thing. Where is it? About 10:19 my time. I'm going to go back to that trade and show you that last one. And then I'm going to get into microstructure with you, and I'm going to show you reading the process in high speed. And it's not a scalping thing here. What I'm going to do, since we have a lot of rotations, is it'll give me a lot of opportunity for narration. Now we have a structured trade in the Trader Lab. Hold on a second here. I got to make an adjustment. We're coming back. Okay. Hold on one second, guys. Got to make a few little tweaks. Okay. Okay. This is called the IB continuation trade, and we're in it. Let's assume having some trouble. There you go. We're in a downtrend, maybe. And we have a structured trade in Trader Lab, which is called the IB continuation trade. This is the location. And this is all posted in Trader Lab. And if you're in Trader Lab, you know this is a structured trade. This is where it actually sets up. We have, and let me show you this, what this looks like in the profile world. A profile, basically, all it's showing us is what's called distributions of volume. And you can learn about this in Trader Lab. And what you have is, if this price up here is too high, and then we leave it, this is the fair price over here, and this is the outside edge. And the market tends to rotate around. If we fall away from it, it creates a new distribution. And what's in between is called a low volume node. And a low volume node is actually a separator between distributions. Well, it's also aligned with something called the IB low, which is the first hour's low. So typically what happens is if you're in a directional market and you break one side, which is the first hour's high or low, and don't forget where yesterday's low is, we know that if we pull back around, it's possible we're going to go lower. That means possibly we can come down to this outside edge, which I need to label. It's right around here. So 56, that's called an outside edge or low volume node. It's a potential target for a test of the current low of the day. And if we get under there, I have to go take a look here because I don't really have much below. I have this 35 as an extended target, and I also have 24. Let me just look what's down here. 24, 25-ish area. Really not on the hit parade, but you never know. So 38 and 35. I say 38. So this area is a target if we get below the low of the day. So I don't necessarily, I don't predict. I don't know. It's not my job. I just try to get an alignment, and then I use a trade management process. So let's take a look at this is the last short that I put on. It doesn't mean that there aren't other trades in here subject to your fractal or time frame. And this is a Trader Lab structured trade. Now, there's other trades in here, but primarily when you're a developing trader, it's about waiting for your trades, waiting for your locations, having the discipline to be able to sit through something like this and not lose your mind and respond to FOMO. When I say lose your mind, I mean literally, because if you're responding to emotional stimulus and, chasing the market and FOMO, all that, that is a chemical response, and it is a lunatic is on loose in your head. And we, in the Trader Lab, we call that Hyde. You've heard of Jekyll and Hyde? Hyde. Hyde is that unbridled emotion that is not regulated by your consciousness. It just runs amok. It's no different than being under the influence of, it's hormones, it's all kinds of things. So it's no different than being under the influence of some kind of drug. Is there no audio? Is there no audio in Discord? I'm reading that. Oh, it's fine. Okay, great. Thank you. Okay, let's take a look. So this is the location. Now you have to understand something. This is not about putting your order out here and just that's it. Okay, it doesn't work that way. What it is, we know that we fell out of here and now we're auctioning down here. We also know there's extreme volatility and momentum. So when you come up to an area, let's start looking at the evidence to get short. So the liquidity is sitting right here. So this is our trade, and I posted this. Everybody knows this if you're in Trader Lab, that we want to get short. Now, of course, the challenge is where, how, what. So this is a sweep, and a sweep is suggesting a reversal. This is part of the part of what we do. And so this is a Bookmap in the order flow. What we're looking for here is this is a tool in the order flow, and it says a sweep. A sweep often is exhaustive, and we look for, and it doesn't have to be, this is part of the joy of trading. There is no absolute, there is no for sure, there's only maybe. So right here, I'm looking for a reversal. Well, I just came through my location, which this should have a little level on here. This is not my trading computer. I trade, my trading workstation is a different, same tools, just different computer. So this is the location for the short. So it's this, called the IB continuation trade. So I come up and I'm looking for the reversal. So I have this, I have mid, VWAP, and VPOC. Now this is pushing through I get my sweep again. And right here, I have something called micro high volume. Now, like everything, it's only maybe. So there's nothing here. And my buyers are above. My buyers are above. My buyers are above. I have my sweep. Don't forget, I had it there. And my buyers are not above. They are now below. That's a change in behavior. So this is the first element. And it happens to be ETH low. And I have no idea if that means anything. I'm just saying. So I have my sweep again. And now I have a change in behavior. This is the first change in behavior since I got to my location, and I break. So this sets up a trigger. Now, I'm going to draw a little box around this, and I'm not going to spend a lot of time drawing anything for you guys today. If you want to see how you box out these things, you can look at many of the webinars I do where I actually spend time with the microstructure, but I'm not going to do that today because we got good volatility and I want to go over microstructures with you and triggers. Not scalping, just behavior, because we're going to get a lot of examples today. If I can get this drawn here. So this is basically your sandbox. This is a trigger. So what I do, and one of the ways I try to share this in Trader Lab, is to help traders see structure. Because when you can train your eye, you'll be narrating the market. And right here, I'm looking at this and I'm thinking, well, maybe we're just going to, come back here, which we could. Because if this is too high, we can still reject it and come down. So it's one or the other. Now I get a sweep here, a sell sweep. When I see a sell sweep, it suggests a rotation back. Watch the behavior of the sweeps. Sweep up, looking for the breakdown. I'm at my location. It doesn't do it. Okay, buyers, 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 sweep up. I'm looking for the rotation down. This time it does do it. Here's my structure that I broke out of, and you can see it right here. It's a distribution of volume. It's a consolidation. That's all this is. Now I get the sweep, the sell sweep suggests the opposite rotation. This is order flow, and this is how Bookmap can help you. I come to my location, and I'm going, isn't this what you do? By the way, I got to mind my trade that's working here. I am looking, and this is in the current market. I'm looking at 56 area, and then potentially down to 35 area. Not trade recommendations. I'm just mentioning it because these are on the price map. 62 was also a target earlier, which I got lucky on. That's all I can tell you. When that news hit on the tariffs again, I was sitting short, and it's not skill, it's just luck. Remember, random outcomes. So here I get my sweep, I get my break. Now, let's get into the entry. So, rotation up, sweep again. So I got sweep, sweep again. Back again on the let's get short, Lewis. Where's my outside edge? It's up there. My trigger is here. My test of the volume is here. Another trigger here, another test. These are all shorts in the Trader Lab. This is your entry. Trader Lab, did you guys get short? Steven, you got to put another quarter in the slot for the audio. So this is the short. And then for me, the scale was ahead of this low just to get risk neutral and then hang out. Now, this is your resistance now. I'm currently just sitting short, which is not a recommendation. So I'm just hanging out. Because for me to get taken out, and my stop is being trailed, just so you know, and then I use microstructures to gauge the auction. And I'm not saying it's the best way to do anything. I'm not sure what is. I just do what I do. And this is why Trader Lab exists. It's the collective experience. It's the leverage of this, just call it it's a group of, and we're leveraging this experience that we all have. Mine's 45 years, and it doesn't matter how long you've been doing this. the longer you've been doing it, the more paths and roads you've gone down that haven't worked. That's pretty much what it comes to. And then at some point, you find what resonates with you. And for me, it was not indicators. It turned out to be language. So I just changed what I do from letting an indicator, an output of this, tell me something, to this actually being what I interpret. So I'm here. So I'm sorry, I don't know if you guys, I have a news feed running if you hear that. Anyway, let's come back here. The high volume structures, these micro structures, can be used for trade management if you vet it. So that's too high. Why? Chop, chop, chop is an auction. Too low, too high, break, too high. Here's the chop, here's the test, too high. Now here we're getting a sweep, and 56 is a target for me, not a recommendation. So I have liquidity right here. That's a scale, not a, again, it's just structure. And now I have one left. Just saying. And why would I scale here? Because this is an outside edge. It's labeled low volume node. The liquidity is sitting in the book, and I have a sweep. Now, the sweep I didn't know, but this was a target. And why is it a target? This is what Trader Lab is about. It's the same reason this was a short, because it's an outside edge. What happened down here? This is a micro distribution. It's a little distribution last time we were down here. And this volume right here was too low. Let me just show you the auction. Now, this doesn't mean we're not going lower. It just means that it might be a place to observe. And that's why I took another scale. So now I've got one left. It's kind of, I call that, it's kind of like the Hail Mary pass, if you've ever heard that term before, where you just throw it into the end zone and hope for the best. So my structured trade is over, because this is structure. The Hail Mary pass runner is still on. Now I want to show you what this is here. This is the current low of the day. And this is the distribution that the participants found was too low. Where is the high volume? I could open this up because I want to show you how I come up with these levels. Now, the fact that I come up with the level doesn't mean anything. And I really want to stress that to you. There's no prediction. There's nothing in this. It's all random. And if you accept randomness instead of needing to be right and predict, I think, at least for me, what it did is it released me from needing to know. Because when we get into predicting, we're looking for certainty, and it's a mental state. So I created a different mental state, complete uncertainty, complete unknown, and it relieves me from the need to be right, for my ego to interfere with what's happening in front of me. Because my job is not to predict what's going to happen. My job is to align with what is or might happen. I hope that makes sense. So I'm going to outline this distribution so we can kind of see where this is. The outside edge of the distribution is there. Now let's come back to the present moment. So now, possibilities. If this is too high, we can come out. So this was my last target. Got out there, and I only have one inside a trailing stop. Any questions on the last trade? That's all I'm going into today. And then I'm going to narrate real time, if that's what you'd like me to do, because of the volatility. Volatility gives us a lot of opportunity and, of course, risk. But are there any questions on the last short which is a Trader Lab structured trade. And if you're visiting in YouTube, you can access all of this. That trade was from wherever it was, up here someplace. Yeah. The short was from here down to 56. Well, it's a 20-point trade. That's Trader Lab. Now, here's the other thing about Trader Lab. Once you understand market mechanics, and this is going to take time, this is not plug and play. This actually means you've got to do the work and actually open your mind up to some other possibilities. And of course, if you're a profitable trader, and profitable doesn't mean winning trades. Everybody has winning trades. Profitable means that over time, in spite of it all, winning trades, losing trades, you are net profitable. If you're not a profitable trader, the thing about this is we all have winning trades, and we all believe we just have to make it better, or we have to be better, mentally or otherwise. That's what we all believe. Well, maybe that's not quite what it's about. Maybe there's another element here. Watch our 56. And I've got one for the Hail Mary pass. And remember, 35 is my outside target, not a recommendation. Market can do anything. So that's a 20-point trade. And in Trader Lab, I always talk a minimum 2-lot configuration. So the job of the first contract is to get you risk neutral. So the worst that happens is, you scratch. The second contract is targeted, subject to your plan, and also managed. And then if you're beyond that, then you can have a runner or whatever your sequence is. It's not about catching everything. It's about catching the piece that has a statistical edge. For me, this has a statistical edge, the 56. If I get below the current low, then it just sets up another level. So we'll get to see what this does. Do you guys have any questions before I move on? Yeah, thanks, Alos. Would I get long after the short targets? No, I would not get long, GA. I mean, I can't say I won't get long, but in the higher time frame, which I've been showing chart on, the market's long. The market goes up to go down, and here's our support still, you see. Now, I won't get long here. My job is not to pick the bottom of anything. It doesn't matter. If it goes down and it goes charging up 100 points and we make a new all-time high, I don't know if I'll be participating in that. I don't need to. If anything, I'm going to be watching how the market rotates, and I'm going to be taking continuation trades until there's a trend change. So for me, I have no longs. For me, a long is covering a short. So like this is my location for my target, right? I would not get long here. Why? Everybody's selling. And what's the condition of the market? It is long. Where's my support? It's down around 38, 35. Okay. No good stuff. Oh. Can I show the stock bar? No, I'm sorry. I don't have, Gemin, I don't have Tesla, but this is the basket. This is the S&P 500, the E-mini. It represents everything. So personally, I don't trade stocks. I trade the basket. And but you can trade anything you want. This process, this is really how markets operate. And in Trader Lab, we have traders trading stocks, options, futures, NASDAQ, anything, gold, euro, bonds. Nobody confesses to trading the bonds. But bonds are a good market to learn on because they're slow. Or other markets that are good are grains. Nobody talks about grains, but those were the first markets I traded because I was brought in the business by one of the largest wheat traders on the floor of the CBOT. And so I naturally learned about grains. Now, from a boy who grew up in Brooklyn, You know, the only thing we had that was growing was the grass between the cracks in the sidewalk. That was it. I didn't know a soybean from a jumping bean. Notice how the behavior is here. Let's look at this behavior. We had a sweep here, which sets up a potential reversal. We have a sweep here, sets up a potential reversal. I have a sweep here at a location. And where did this location come from? All the way over on the chart, which I already showed you. That's where it came from. Why does the market stop and react here? If you want to understand this, you should come to Trader Lab. Now, it doesn't mean anything other than what the market might do. You know, remember, the best we have in this is maybe. So maybe it'll do this, maybe it'll do that, maybe it'll make a new low, maybe it won't. So if I know what maybe is, I know maybe this is too low. And I know maybe I'm putting my exit here from my short. That's what I know. And it was 56.25. That's my exit. So all there is for me is continuation trades on the short side. So, and if I counter rotate, I then have another outside edge up here, a low volume node. Let's label it. It's near yesterday's low. So I'm starting to draw out areas of behavior. Now let's think about why this might be material. Let's look at this. The short was there. Well, I have another outside edge in here. So, and it's by yesterday's low. Where are stops? Typically yesterday's low. If I push outside, I have, hold on one second. One moment, guys, sorry. Okay. Okay, let's watch the behavior here. Liquidity comes in the book. I'm at a high volume node. This is important level. If I can't clear this, I'm going down. So I have, this is how this might work. Outside edge, rotation. Outside edge, rotation. High volume node, if it's too high, I reject it. There's some volatility going on. Is there, is our POTUS speaking, or is that going on right now? Does anybody know? Oh, Kugler. Oh, nice. So the locations are here. This one, high risk location, but potential. Let's just watch the behavior here. I say it's high risk, not because it's not a viable short, but because we can squeeze out here. So we have to be very careful. This is a potential short in the Trader Lab, but I consider it, your risk is going to be out here somewhere. So nothing here. I would not be participating. I don't give trade recommendations. This is a potential short in the Trader Lab, but we'll see. What I like to do, and it's just me, and it's all subject to the fractal or time frame individual traders trade, is if I can get positioned, I'm going to try, and I would trade, you know, it isn't just a 2-lot, of course, it's more than that. So let's just use the term 3-lot here, or 3 position, whatever it is. The idea is to have runners. Remember, we're trying to go down here, next target. So this would be an aggressive trade. This is called VPOC migration. This is your, I believe it's the VWAP, and it's covered up. where do we come? We come back to this liquidity here, or I should say the current low, right? Right here, there's your sweep, which suggests counter rotation. So here I have a mixture of things. I see the buy, but I'm in downtrend. So for me, I'm only taking shorts. This is called VPOC migration. As I said, this is an aggressive short. If you and the risk, remember, is out to here. And these are structured trades, but this one, if you're not already short, you could very easily get squeezed here. So you just have to, determine if you have an edge with this. I'm just saying, for me, I would not be taking this. It's not, doesn't mean you can't. It is a structured trade in the Trader Lab. Let me look here and see what's going on. Yeah. So it looks like it's going lower, but it's not a recommendation. Remember where our support is. It's right in here. So this is what's called the volume point of control is the highest volume currently for the entire RTH session. That's saying everything above us at the moment is too high. This is too low in the microstructure that is over here. That's why it's acting as support. So I have micro support, but this is the big, more important because it has more volume. If I come across here, I'm going to squeeze out the shorts. If I can't get above here, and I, of course, get below this, then I go down. I'm looking for 35. This is kind of how you might use the auction to organize potential. And that's all you got, potential. You don't have anything more than that. We don't know where it's going to go. And the other part of the joy of this business is we don't know how or if, because it's all random. So these rotations are random. Are we going to go straight down, or are we going to come up first and squeeze the shorts? Does anybody have that answer? I don't have that answer. What I have is maybe. So since I don't have any certainty, I'm only operating in what I know, which is I know I don't know. So I operate in maybe. Here's a sweep. We want to see now what happens with the sweep. Do we continue down or what? So I only have one runner left. So whatever happens, happens. So with the way I kind of do it, and you don't have to be doing anything like I do. I mean, I just see the thing about this is we all find a time frame, if you will, and intraday, there's no time for me. It's really more about fractals. So it's what rotation or, so the last short, unless you took this one, is from the IB. So you're still, which is why I'm still sitting with a runner. But if I hadn't been short, I could take this, but where am I going? You see, my range, this is what I have to deal with. I got to deal with that white line. So if I took a short here, and by the way, I don't enter here because I'm just not that, skilled to be able to, when I see this, how do I get in? So I don't have a good entry here either. So anyway, for me, unless I'm right here and I see this and I can execute here or there, that's the only way I can get into this trade is there. And I can't get in here. When I break here as a trigger, there's a test and I'd have to be in right here. If I'm thinking about it, I've already missed the bus. And the scale would be ahead of this because it was too low. So it would be short here to there. Now that works, you'd be risk neutral and then your stop just sits up here. And then either you get taken out on a counter rotation or you're sitting short. So that's this trade, which I would not take. And it's just me. It's not a recommendation, but I would be risk neutral and I'd just have added. And then, you could just, I don't want to use the term scalp because it's really not a scalp, but you could just put one on here or put two on there, take a scale, and then you have one more runner. So that's possible. Okay, we have our sweep into this liquidity. We want to see what happens here. 270 sell stops coming out. Really? Is anybody really still long? Let's watch the behavior. Looking for a sweep here and a potential reaction. So if you had taken this trade, scale, exit, you could have just taken it, back here and be done with the ad and have one runner. Does that make sense? So you see this sweep here into the liquidity, and you see that kind of buying. That is different so far than what we've seen in all these down legs. You haven't seen buying. This is a different kind of buyer, don't you think? So what are you going to do about that? Let's look at what we're seeing here. This sets up the potential reversal. Now, the problem, of course, is reversal to where? Joy, oh joy. So what is this? Well, there's a couple things. It can be set up mean reversion. This is my resistance. If I come across this, then I have the possibility of coming back here and maybe coming above and squeezing, because this is called mean reversion. Oh, there you go. So we come up, that's resistance, but I see another sweep. What does that suggest? Up. Where's my stops? Let's come back. This is the reason why I said I would not take this short, because of this. And again, if I took the short, it would specifically be to there, to there. That's okay. But you need to know, and you would learn this in Trader Lab, why is this significant, and why was this little node down here now too low? So now I see a sell sweep. It is still suggesting potentially higher. So I have nothing to do. Now this is micro resistance here. It's called a variable high volume node. I have nothing to do here, and I'm looking now outside. So here is an area to observe, not a trade recommendation, and out here are low volume nodes. We got a low volume node here. This thing, let me move this one down. See if that moves. Not so much. Might just have to do it the old-fashioned way. So it's around 50 3/4. So let's watch the market. I think that's about it. Okay, let's watch. If you have questions, post them. I'll do the best I can. If you want more information, I have a very limited time here. Come to the Bookmap Discord Trader Lab community. There's no cost. Drop anchor in there and get ready to be educated. What you see me do here is not what most do. And what I do is really, I am the indicator. My mind, and here's the outside edge. My mind is the indicator. This is the sweep, and this is our microstructure. Let's just watch the structure. It's not a trade recommendation. Further outside is always better. This is where you're trying to go. If you don't have range, the trade is not qualified. Let's watch. This is a triggering structure, but no range, unless you got enough range. Well, there is range. Now I'm looking at it. It's so volatile. So let's watch. This is a sweep, and here's a structure. It is the wrong sweep. Here's the sweep. It is a selling structure. It is the right kind of sweep. This is a structured trade in the trader lab. You know, I'm so used to the range being so tight. I say, oh, it's not qualified. Yeah, it is qualified because you got to scale here. Okay, this is a structured trade. Now, we did not get out. We got in an area, and that's what you have. Sweep, buyer, and right here, there's no idea. Let me show you the trigger because I said I would show you triggers. Right here, going to the moon. What happens here? The seller is below the buyer. So this is a micro consolidation. Let me just show it to you. I'm going to move this back over so we can see what it looked like when this happened. Now, this is the chart volume profile. It's only showing me the volume here because I want to see inside of this. This is the session volume profile. So this is all the volume anytime we've traded in these prices since RTH open. But I'm isolating this. So I've got my sweep here. I've got my high volume developing right here, right there. I break. That is a sell trigger. Now I'm outside, and this is where my risk is to. So let's just look at it and see what happens here. Whoop, wrong location. I'm sorry. This is the sell trigger. This is the purple. Sorry, guys. Trying to do too much at one time here. Let me move this up. See, there's the sweep. That's what I was looking for, the sweep. So let me get this moved. Right when that happens. So the resistance is in here, right there. So your volume, so what you got here is this: sweep, chop, chop, break, trigger. The trigger is here. The volume is there. That's our current resistance. Okay, so this is the short. You would be risk neutral if you took this. Sorry about that. I'm going to draw a little box around here too, so you can kind of see what the structure looks like. So this is the area to observe. Remember, this is our outside edge. So this is an area to observe right here. Let's watch it. Not a trade recommendation. We're just touring together. Don't forget where the low volume node is up here. We can still come out here and squeeze. This is a selling structure right here. Let's just see what happens. Now, the thing with this is you're trying to go there. So does that give you enough meat on the bone? That's just a question for you. It has to, the range has to fit your trade plan. If you're putting your stop above here, then you're trying to get here. So that's the trade. Whether it works or not, who knows? Why might it be too high? And I don't know the answer. Remember, it's random. Is the volume in here? This is a store. The shoppers left the store and we tested it. If I get above here, then I'm going to come out here. That's all there is to it. And if you take a stop, you take a stop. I always suggest about 3 ticks over, because there's, and here's why. Now this is an event. If I push off from here, the trade is going to be over. It needs to get under here to come there. Otherwise, we're going to push off the other way because the retail price is moving higher. So this trade right now is in jeopardy. And it's up to you to manage your trade based on your plan. This has to get below here to go there. If I don't break below, we're going to push. Remember, the short is here. It's there. You'd be scaled. If you're waiting to take it here, you would not be scaled. So you might take a stop. The trade needs to hold this and We're trying to go back here. Let's see if it works. And these are not trade recommendations. Definitely don't do this. I take stops all day. And if you don't want to take stops, you're in the wrong business. It isn't about wanting to. It's about the casinos pay the gamblers. You know, there is overhead and cost of production. And I kind of, as much as emotionally, you know, I don't want to close take a stop. You guys tracking with me? This is a structured trade in Trader Lab. You would be risk neutral, and now you manage your trade per your plan. You guys have questions? Low key commodities. You trade anything you want with this process. It's generic. This is actually how markets operate. So this is now resistance. You would be scaled. Your stop could stay out here, and then you just hang out. And if you get taken out, you scratch the trade or put a few burgers in the basket. The yellow line and light green lines. Where's the light green line? This is the developing volume point of control. This is a sweep. It suggests the counter rotation. We need to get below this or we're going to squeeze. Let's watch. Remember where the target was, though. Stops above here. Entry was either down here or up here, either one. And your scale was there. Now you're just hanging out, managing your trade. The yellow line is called developing volume point of control. It is the highest volume price. And the auction, which is what this is based on. Now here's support, right? Actually, it's over here now. Outside edge is here. So this was support. So let's watch the behavior. This is a support location. So here's what you have. Resistance, support. If I can get below here, this is my target, not a trade recommendation. So if you're in Trader Lab, subject to your plan, this is a short. Yeah, Mr. POTUS is speaking. And the market is not thrilled, which is neither here nor there. We just trade. I have another sweep, and we are going for this. So this is my final target. It's not a recommendation. This is the short that I took from out above here someplace. You know, so if all things work out, it'll be a 40 or whatever, 45-point trade. And then this is a continuation trade. So you'll notice there's not a lot of trades. How many do you need? W. Bauer. No, I'm not using an anchored VWAP. No, I don't use them. I don't need them. But if they do something for you, you know, like everything, if it has an edge and you relate to it, then by all means, you know, I don't. Where the blue one? Are you asking about? Oh yeah, where'd this come from? Hold on a second. Hold on, guys. VWAP is at 29. What is this? No, I'm not, and that shouldn't be there. I don't know where this came from. Okay. Yeah, I don't know where that one came from. You know, it was a gremlin. Okay, thanks for pointing that out. Oh, one of our traders in Trader Lab just passed an evaluation with a funded account. Congratulations. This is a heck of a day to do it, right? So let's watch what's going on here. Okay, we made a new low, I think. Our outside edge is still down here. This is where the buyers, you notice the buying, they were activated here. This is support. Let's come back to the micro structure. We test, we have a sweep. What happens when we get a sweep? Possible and buying icebergs. Look at them. Potential reversal. Where's resistance? Well, this now is too low. This little microstructure. Now, I'm going to show you some stuff that you may find interesting. Let me put a little line here. This is a micro high volume structure. It's right there. Then I have the next volume structure. Watch where it comes in. Here's your chop. This is your trigger. That hits resistance, which is what was support. It was support previously. We pull back to here. Now, if you are sitting short, this is support. This is support. All of this is support. You have choices here, subject to your time frame or fractal. And we're at an outside edge, which is now moving lower. It's out here. You might cover this, or you're in a higher time frame, and you're just going to sit short and let it play out. And the thing about it is, there's no right answer. It's only maybe. Creech, the way I don't necessarily add to my trades. I want to keep it simple. So I guess I just want to kind of get the idea across in this stream. As an example, this Trader Lab trade here would be an ad for me, or just a trade. I just trade inside of my position. So I would, maybe just throw a 2-lot on here, which I didn't do because when I stream, I'm not doing that. But I still have, if I have a trade on when I stream, I can manage it because it's easier to do. But actually putting a trade on and being, not being distracted. I've paid the price for trying to multitask or stream because I just can't have that much. But as far as adding goes, I look at trades kind of in the sense of the context. If I was not short, would I take this trade? Yeah, I would. So if I'm in a trade from a different, Trader Lab structured trade from higher up, and then I get another trade, it's an isolated trade. So I would put the trade on, and either I get stopped out of it, and plus I have open trade equity that I'm really using on my runner from the other trade. If I got stopped, sure, I wouldn't be thrilled about it. Never am, but so this is just for me a inside trade. So it would be a scale and an exit. It would just trade inside my position, and then I'd have a runner here, trying to get down here, and then that one is way out. That's not even near, because I'm allowing that one, which is the Hail Mary pass trade, that if I get wider rotations out here, I'm going for this. So 35, that's another 20 points from where we are now. So am I willing to give it back for 20? Well, my day is already taken care of. So yes, but that's a different plan. It's like, as day traders, we never have to trade that fractal, but I've moved one out really to a very high time frame, and a lot of that has to do with the fact the market's long, and we have longs in the market. And if you guys know you're in Trader Lab, the market goes up to go down, and the market goes down to go up. So the market went up. We exceeded our upside target. Those of you who have been following the stream, This initially was the target, and we hit it. It was the ETH high, and this was all in the previous streams. If you watch them, it was around 15, and then once we got rolling, we got that was our target. So the high of the day is just a little bit above that, and there's no precision in this. So for me, this was where I was going. So that was the target. And that's all on the chart. Everybody knows this already if you're in TraderLab. We talked about it. In fact, if you follow yesterday's stream, if you want, it's posted. If you're in YouTube visiting, you can go to bookmap.com. You can just go on YouTube and put in Bookmap Tom B, and you'll come across all these webinars. And I do suggest, by the way, if you're interested in what you see here, that you just follow this thing, daily, because you're going to see what you're going to see is the market is random. Okay. So something has to be anchored, and that's what we do in TraderLab. It's not about making it up or anything. It's about patience and waiting. This is a structured trade. It is what it is. And so is the last one. So in theory, there's only two shorts. Unless you trade inside, and you can trade inside these things. These are really sweet trades. Anyway, let's get back to what's going on here. So now with Bookmap, you need to understand, you can get as granular as you want to get. So now we're in a bit of chop here, all right? Now remember, and POTUS is still speaking, so that is, something that we're going to have that we didn't have the previous 4 years is a lot more volatility, because POTUS is very verbal. And let's just say a lot of the things that are coming out right now are somewhat controversial. And the market responds to unknowns in a negative way, because it's... So this is just the way it is. So if you remember the previous 4 years, when we had when President Trump was running the show, we had a lot of volatility then. So I would anticipate a lot of volatility. Now, the other part of that is that's good for us as day traders. We need volatility. So the only thing is you have to have risk management, and you cannot get passive. You have to assume, especially with a president who tweets and holds a lot of news conferences and is controversial in some of his approaches, you're going to get volatility because the market doesn't like uncertainty. So that creates opportunity. So you really need to be disciplined here. You need to know what you will do before it shows up, not because there is no after the fact. You need to know where your trades will show up, just as I share here every day in the stream. Not what will happen, but where it might happen, and then you have vetted structures or triggers that allow you to participate. And then you put your trade on, you put your helmet on, you take a stop, or whatever happens, happens. And that's trading. There's nothing more to it than that. And it's random. So the idea is you got to have good risk management. You have to know where your trades show up that have a statistical edge. And you need not to, in my opinion, interact when you don't have an edge. The casinos don't make games up. They don't get bored. And if the dealer pays a gambler, they don't change the game on the next hand. Think about what casinos do. And then think about this business. This is structure right here. Too high, microstructure. Now remember what we can do. We can bounce off of this just like we did earlier and go lower, or we're going to push through and squeeze. It's one or the other. But it's only one or the other. It's not both. If this is too high, then this is too low at the moment and maybe out here. So this high volume is support. So if you took this is your sandbox from there to there. And then you need to be scaling ahead of this, not at it, ahead of it. So there you are. So now, see the behavior. Now, I am not a scalper. It's too fast for me. In other words, this, Now, I can execute here because I can read it. But I have to be able to get in here. I don't want to get in here because I found support. So what do I know? If I come over this yellow line, and when I say no, I can say is I know the potential. I don't know anything else. Here's what I know. Resistance is right there. Micro high volume. So I'm in a fractal. I'm inside. This is the developing time frame high volume structure. If it's too high, south. That's why we went there. If this is too low in a shorter time frame, back here. If this now it's too low and that's too low and this I can now squeeze and come out here. This is the auction. Now, do I want to trade from here to here? I don't. And why not? Well, obviously. But there's another reason. If this is too low, and now this is too high, and this is too low, what do you think comes next? Isn't it this? I mean, is that logical? Now, I don't know to where, that haven't been blessed with that. That's not part of trading. Now, if you happen to have that, then come to Trader Lab, clue us in. But in the meantime, where's my outside edge? It's out here. And what's out here? Now, write this down. You must look left. And I use the term must with all sincerity, because when you look left, you're going to know over this swing are buy stops. So if the market starts rotating up, where's it going to go? Here. And then if I come outside and I exhaust because I see stops, in other words, I see the delta and I see exhaustion, it's just stops and maybe icebergs, then I'm going to mean revert and come back here. I already know where my next trade is. It's out here, which is not a recommendation. So that's one thing. The other part is this. I have to be careful of the squeeze. So resistance, support. This. See, this is what tends to happen in this is the market tends to come back to the mean. This is called mean reversion. I don't take longs because the trend is down. I only look for shorts. So nothing here for me now. So let's watch the behavior. So I just sit back and tour. I'm a tourist now. I just sit here and wait. I don't have a trade. Now, it doesn't mean I can't trade this if it's in my plan. But I don't want to be doing short cover, because it's exhausting and it's very easy to make errors. And it becomes almost like FOMO. So I find for me, because my risk to put a trade on, whether it's here or here, is the same as getting 30 or 40 points out of a trade. I find for me, I prefer the bigger swings when they're available. And if they're not available, then I work with what the market offers if it fits. This looks like it's still going lower. That's why I have a runner. It's just, and this is all what I'm trying to do here. Let's get down in this area. We'll see if it does it. Now, I can tell you in Trader Lab, there are traders that are going to sell this and are going to sell this. And that's okay. It's not for me. I don't make judgments. The thing about trading, I think, guys, that you should know is it's not like you cannot be somebody else. You have to find out who you really are and where your skills are. the fantasy of being able to trade all these rotations and you're thinking all these dollar signs, it's not really what this is about, unless, of course, you can do it. For me, it just doesn't pay because I can, yeah, sure, you get winning trades and you're going to get losing trades. Well, what's the point? If when the dust settles, your broker sends you a gift basket and even comes to your house and gives you a hug because you're sending his kids to college. But in the meantime, you're getting winners and losers, and when it's all over, are you really ahead for the risk? And again, this is for you to answer, not me. So I don't get into this unless the conditions are correct for it. So I just don't do it. So I'm still looking for lower, right? So that's all I need to do. So for me, my risk is off. I have nothing left to do. I'm sitting here. My day is already good. And it doesn't mean I'm not going to continue. What it means is I'm going to wait for my structured trades. I'm not going to run into this because even though the trend is down and I'm only going to be taking shorts, I don't want to be selling. This is my little sandbox. It's here to here. And then if I get above here, I'm coming back out here or maybe even here. So I already know that based on the structure. So trading in here is a very high risk proposition. I don't do it. Oh, I do it under the right. This is not, for me, this is a structured trade that is not qualified for my plan, but under different conditions, it is. And this is the kind of thing you need to learn is what trades are qualified under certain conditions. What is the condition of the market? Maybe we can agree at the moment the trend is down. If we can all agree the trend is down, then what? If the trend is down, what do you want to do? Well, are you a counter trend trader? Me, not so much. Do you want to just be taking counter rotations and fading them to come back here? So if I can come outside, I'll be looking for a trade to come back to the mean. It's called mean reversion. Now, we're having a hard time getting above this, but that doesn't mean anything other than there's stops there. Remember that. Look left. There's stops there, and now there's stops here. Do you want to step in front of these stops that are now accumulating? Retail traders are going to be pulling their stops to these swings. Do you want to join them when their stops are sitting here? Are they going to, and they might, remember, everybody wins and loses and everything else. Me, not so much. Because why? Retail trader behavior. Write this down. Think like a retail trader. Don't act like one. Where's their stops? There, there, and here. So if I'm going to be entertaining the thought of a short, it's going to be after these guys get squeezed out. And I have to be conscious of this. That's the point I'm trying to make. And where's my outside edge of the distribution? Well, I'm going to be looking in this area as soon as this thing gets popped. And if it doesn't get here, I have to be very careful because all it might do is give me a little counter rotation and then squeeze. So I just, and I'm not calling trades. I'm just giving you an idea of concept. And then you can actually come to Trader Lab, learn how to do this if you're interested. And it's not a plug and play. This actually requires that you learn how the market works, why it does what it does, and then why you might wait for locations. And it's not about playing a video game. This is about the business of trading. So how does the business work? Well, locations. And then why? Market mechanics. Why might we come up here? Because there's stops at the swing. How does that represented in the profile? An outside edge, low volume. What happens at low volumes? There's swings. This is a swing. And the fact that we left it quickly, it's not auctioned. And an auction is the chop, chop, chop thing. Well, I don't have any chop, chop, chop. I have rip. Well, then there's going to be stops from different time frame participants up here. So if I come out and get the stops and test yesterday's range, and whatever we do, we do. Then I'm going to look for a short. And it's not a recommendation, because if we blow right through here, I don't have a short. I'm just going to have, oh, that's interesting. Or I'm going to take a stop. So I have nothing to do until I have range. And then it's called mean reversion, and the goal is to come here. So wherever I get short, which hopefully is going to be somewhere out in here, if it sets up, I'm going then to look for this to get risk neutral and then hold for whatever. And the whatever is based on whatever happens and trade management, subject to the individual plan that I or you have. And I'm not calling trades. I can, subject to what I do, I can be trading inside of all this, or I don't. But for the Trader Lab, it's really just location, 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 patience, work on your crochet, think about how the market works, think about your experience as a retail trader, think about the trades you take and why you get stopped out. Think about where the stops are, and think about what was too high. Where's too high? And where's the stops? It's going to be over this high and this high. So this, let's just move this out here so we don't lose our composure and our locations. Let's just observe. And if you have questions, post them. Are you guys tracking? Is my VPOC a rolling VPOC? Ricky, it's RTH only. The ETH VPOC is important also because it has a high probability statistic attached to it, which needs to be vetted if you're interested in statistics. We have a whole boatload of those in the Trader Lab. You know, the idea of Trader Lab is the traders coming together to leverage. And what is that leverage all about? Research, posting of charts, sharing of ideas, debate, humor. So why did we come here? Now, this does not have range. But why do we come back here? Why did we come back here and test it? Why? If you're in Trader Lab, you'll know why. This is a potential short, but there's no range. For me, I wanted further out, but that doesn't matter. If it doesn't do it, it doesn't matter. The reason I pulled this box over is, and here's the concept. We have a couple possibilities. We can come outside and take these stops out, or we can come back to the volume that we rejected here, that we rejected there, and this is the outside edge. We can come back out here, and if the sellers who were here go, oh, really? Here, have some more. And now we come back here. This is a mean reversion trade. Now, again, it's subject to your time frame or fractal and range. I don't trade this unless I'm in the mood because of my range, which is only from here to here. And I don't enter here. By the time I'm conscious, I'm getting in here and I'm only going there. I can't trade it. But here's what you can do. You can learn to interpret it. And in the Trader Lab, I always suggest to our developing traders, and by the way, I'm a developing trader. The fact I'm trading 45 years, you're never done with this. You're always looking at it, thinking about it, trying to get better, looking for nuance, looking for things to improve. And that's what we're all doing in Trader Lab. We're looking to improve. Notice the behavior. Why does this happen? Why did this happen? Because the sellers took over from the buyers here. When I come back to where the sellers were, I can get a reaction. But where's maybe too low? The buyers are here. If I get below here, then I'm going south of the border. If I can't get below here, then I can squeeze. It's one or the other. See, this is why, for me, I can't predict anything. I can do is I can understand where behavior might happen. That I can do. And then I can define triggers that you can learn in Trader Lab. And it's even in those 60 PDFs you can download. You come to the Bookmap Discord Trader Lab community. So you can kind of see some of this stuff, broad strokes. And in the Trader Lab, what the individual traders do is they take the information I've shared. And the idea is you take it apart and you kind of re-engineer it. You take the ideas and the concepts and you apply it to the time frame or fractal you want to trade because it's generic. The auction is generic. While we're waiting on this. So you can kind of see this is our resistance, but I'm still not keen, is the right word, on taking a short here. I am reading the auction. You see how you might use this understanding of market mechanics. Now, the thing about it is, if we can read the behavior, we might get in alignment with it. Now, the other piece of this is location, location, location. So triggers happen everywhere. All it is rotational. If this is at a location and I get the trigger, then I might have a qualified trade. If I'm reading this behavior in here, then I don't, maybe, don't have a qualified trade, but I have components of a qualified trade, but I don't have a location. Does that make sense? How we doing? Please give a like if you're in YouTube. I hope you like this. I hope you're getting something from it. This is the Trader Lab. If you haven't visited the Trader Lab community, use the link in the bottom of YouTube. I'm going to just show you what these structured trades look like if you want to come download them. You know, this is actual trades, and a lot of them are screenshots, and some of these are experimental. I did these about 5 years ago. Some of these are the structured trades you see me do here, and it was never intended as a trading course. I'm not a vendor. There's no cost for this. So I just put things together because traders were asking me. And some of this down here is experimental. I was working with Bookmap developers on ideas because I know a lot of traders are indicator oriented. So I wanted to help create some tools that reflected order flow. Some of them have been incorporated into our current add-ons. Others have been thrown out the window, which is what you do when you do research. So you notice where we're coming? This is why, even though I have structure, I have no trades. Now, let's go back and look at the structure. Where's my outside edge, you ask? Isn't it above these highs where the stops are? Let's come back. So where's our outside edge? It's going to be out in here, maybe, and it doesn't have to get there now, ever, never. So I have this location, one area to observe, and again, guys, not a trade recommendation. I've got this location out here, high volume area, and I have this back up here, the IB. Post any questions you have in the meantime. We're waiting for this to ferment. And again, guys, I don't call trades. You don't need to take my stop. I take them. It's part of the business. I don't like them. How can you like taking a stop? It's almost like paying a bill. But the casinos pay to gamblers. You have to pay to play. Every business has overhead and cost of production. You really need to change how you experience it. And it takes practice to get detached emotionally from the outcome. I can assure you the dealers don't get depressed if somebody walks out with a suitcase of cash. And the casinos do not change the game because somebody got paid. They just play the game. That's the business we're in. So you're spending your time about being right and knowing what's going to happen and all that good stuff. I suspect you'll find, like I did, you're wasting a lot of time. Because certainty does not exist, only maybe. So here we came to resistance. We're near an outside edge. It's one of the areas. Let's watch it. Any final questions? I'm running out of time. We've got about 10 minutes, so if you have a question, post them. Please give a like if you're in YouTube. Click the link in the bottom of YouTube if you're interested in visiting the Bookmap Discord Trader Lab community. It is no nonsense, and it's not romper room. I'm just going to say it's about business. So if you're interested in business, come to Trader Lab. If you're interested in a video game, then I think there's better video games than this one. Definitely more entertaining. What is this called in real estate? What is this called in real estate? What is this called in real estate? In the Trader Lab, it's called mean reversion. You're going here. Maybe. Is everybody tracking? That's a short. That's right. Location, location, location. You know, I don't call trades, but I think I've gotten pretty close to the edge here to show you this trade. To let you know that I was anticipating it, where it might show up, and to wait for it. And the idea is to try to get here to get risk neutral. And then, subject to, where are we trying to go? We got to watch this, and we're still looking for this. Any questions? This is Trader Lab. Costello, the HVNs are important, and it's kind of conceptually what they really are. And I'm talking fractals now. So anyway, this is our scale. And now it's hold and trade management. Is everybody tracking? Does everybody see this last short and that it's specifically something called mean reversion? And I think I gave a pretty extensive explanation of why we would not take a short until we came outside. And the outside is there, which is there. We also discussed that stops would be above the outside edge. Where is the outside edge? It is here. It's right there, actually, there. And if I push through this one, there's another one at a higher level, which was up here. So I had two locations for the short, there and there. And there's that one, and that triggered. So put the trade on, put your helmet on, and promise you'll never do it again. You remember when you were a kid, you said, I promise I'll never do it again. Only kidding. Costello, you saw the trigger, right? Please give a like if you're in YouTube. I don't call trades, but this is Trader Lab. You can learn this. And if you think this would be an advantage to get, and you're short, this is the trigger. This would be the entry. Stop would be there. Scale is here. And then now you just wear your helmet or manage your trade based on your plan. Let's get into microstructure. Low volume zone is here. Micro high volume is there. Too high. I'm not paying that. There. Now, that's resistance. I can keep my stop back here, and I say or because now it's up to your trade plan. My low volume area is here in the microstructure. So this is retail in the developing daily time frame. This is retail in the micro time frame. And, I don't use time frame, but I'll use it today. And this is too high. If that's too high, and this is the higher time frame, daily time frame, maybe this is too low. So if that's too low, I can come back and take this out and take this out. So my stop could either be here or I can be looking at a short here. Let's observe. Not a recommendation. And I've got 5 minutes. Final questions, guys. And that's not a trade recommendation. I'm saying it could be. I'm not saying it is. saying it could be. Let's watch the behavior. Resistance is here, and this is another potential area of behavior. It's not a trade recommendation. Let's watch the microstructure. I'm running out of time. Please give a like if you're in YouTube. This is the Trader Lab. You can learn the process. It's not the Holy Grail. It's just a way to slice and dice the information that the participants in the order flow gives us. The idea of order flow is not to be stuck on price and indicators. It's to understand what this says. Remember what indicators are. And I don't have anything against indicators. It may sound like it, but what I found was that retail traders think this is a business of indicators. It's not. An indicator is the output of something. Okay? If I can operate here because I'm the indicator, I'm interpreting what's happening, I can then have timely execution with tight stops and be able to get risk neutral. Does that give me an advantage? Also, if I understand how the market works, how it rotates, where it might go, and I can anticipate the behavior, does that give me an edge over other traders who are just following indicators around? It's like being put on a leash and being led around. How about thinking for yourself? And yeah, you're going to take stops. You're going to have losing days. So let's get used to that. Let's forget about avoiding it. Let's understand that it's overhead and cost of production, but we should only interact with the other participants when we have an edge. That's how gaming works. The casinos only play games that have an edge. They don't make them up. They don't get frustrated. They don't play revenge games. If they took a loss on the last hand, they don't change blackjack to 20 cards from 7. You know what I'm saying? We do all the things that they don't do. Why should we expect to be successful if we don't have self-control and understand where our trades show up, where they fail, and know not what will happen, what might happen? You don't have those answers. You might be able to get some answers in the Trader Lab. You'll never get all the answers anywhere. You'll get some of them. And the rest you're going to get from your experience. Your experience, you cannot get past the need to have experience and to do specific practice that is based on a business model. That's Trader Lab. And as far as how you feel about it, your fear, your greed, the lunatic, we all have the lunatic. That's Hyde, Jekyll and Hyde. You'll learn about the lunatic in the Trader Lab because it's part of all of us. Where's resistance? Too high, right? Micro high volume, too high. Outside edge, there. Guys, if you're interested in this, you got my personal invitation. Come to Trader Lab and be ready to go to work. If you want to be able to do this, you got to work. And the thing is, I spent years working, but I had a dysfunctional, defective process that I did not know was defective because I always had winners. And the thing that gets us, and it's in the Trader Lab and the library of webinars that you can all access, it's called Trader Groundhog Day. Getting excited, doing a bit of curve fitting, a little tweaking, a little tuning, a couple more indicators, a little of this, a little of that, a little bullion, a little salt and pepper, and now you think you got it. Then you go into the market and you have winning trades, yet you're still moving backwards. Is that you? Well, that's all of us. What are you going to do about it? The thing about it is, with Trader Groundhog Day, we all think we're doing the right thing. And yeah, we are doing the right thing, but if it's defective, maybe you don't want to keep doing it. What do you think? Too many lines, I know, but I'm drawing them for you so you can see the volume. The outside edge is here. The volume is here. There's the volume. There's a trigger. There's a retracement. Now what? Too high. What's this? Break. What's this in this consolidation? Too high. Where am I going? Back here. It's called mean reversion. Hope you got something out of this, guys. Please give a like on the way out. This stream I'm going to make available to all of you over the weekend. I'm going to change the title, not sure what to, but you'll be able to watch it. There's a library of webinars and a Trader Lab community. It's available to all of you. I just want to point out this is what, well, get over here, what this looks like. There's a lot going on. You can see this is a very active community, a lot of ideas being shared, a lot of trades being discussed, and a lot more. There's not a right way to trade, but I can suggest to you there's a lot of ways that we trade as retail traders that do not work. So if you're not getting the success you want, I'm going to suggest maybe come to Trader Lab. Here's the library. Start with the primer webinar. It gives you a high-level overview. There's a couple other ones you might want to grab. Why most traders fail using indicators. Are you trapped in Trader Groundhog Day? That was me, spent years. How to trade high volatility reports. I think we're going to be getting a lot of that with the current administration, just the nature of how they communicate and how markets respond. VPOC migration. What is this? What does it mean? And a lot more. The 60 structured trades, you can download those. Auction market theory, understanding market characteristics, psychological aspects of trading, and a lot more. Please give the thumb up, give the like. Thanks again for visiting Trader Lab. Have a great weekend. This stream will be available to all of you who are visiting today in YouTube, and also those of you who are in the Bookmap Discord Trader Lab community. Take care, guys. Have a super weekend. I appreciate you stopping by. And remember, if you don't have a plan and you're gambling, that might not be, shall we say, the solution to longevity. If you're interested in the business of trading, stop by, visit the Trader Lab. There is no cost. Take care.